All right, guys. Pretty much today is the day after the elections. You can see that here. The congressional and presidential election has ended. You can see BTC going to the moon pretty much here. 8%, breaking all-time highs. Same thing really with Ethereum and just all of crypto right now. You can see crypto is just booming. Pretty beautiful to see. Even Solana, look at Solana right here opening up and just going up already. Look at that, 22 points, 13%. This one I put the wrong one, my bad. 10%, 8%, 246 points. Oh my, you can see Bitcoin was the leading one. SMT divergence there going into the election week. And you can see the strength here was just straight dominance. BTC dominance is still there, breaking all-time highs, reaching all times, like pushing up, and then everything else now is just trying to catch up here. So pretty beautiful. You can see here also for the indices, you can see the SMT divergence right here. You see ES making lower lows, NQ making higher lows, pretty much. So goes to show the strength there pretty much also. So Dow is like right in the middle right now, so not reaching these lows while Euro is reaching the highs. And this is kind of what correlates to today's trade here. So right here you can see no lows being reached, highs being reached. What does that mean? We're gonna likely move. This one's gonna move up higher, this one's gonna move lower. It was more of a short-term rally. And again, I was tape reading GU, but I took the trade on EU. So I'll show you guys that right now. You can see that the account is at 0.69. A little small W today. You can see just 1% really. $50 is 1%. You can see a combined total of 50, which is 1%. So yeah, I took a little short-term scalp. Again, I was risking way too much. Two. I didn't hold to the original position. I'm gonna show you guys that right now. But I'm gonna go over the trade and we're gonna go over my bias as to why I even took this trade right here. So it was a little short-term scalp. I'm not gonna lie, very emotional trade. Very emotional trade. I should have not taken this trade at all, in my opinion. Should have just been risk-free for the whole day, because I did say I'm not going to be trading until like FOMC, after FOMC, maybe the day of FOMC. But I told myself, like it's not really worth it. But here you can see we did take the trade. Again, I've been tape reading. I've been like really just watching the market for what it is. But the lower time from entry, I'm going to tell you guys why I even entered here. So you can see this right here. What is that? Order block. What is this right here? Order block right there. What is this right here? Sweep. So you have a sweep, and then you have another sweep right here before this. So you have 1, 2, and then you see you create a change in the state of delivery. What does that have right here? Fair value gap. So fair value gap respecting, pushing lower, and then you know what? Move lower, create another change in the state of delivery. You have another one overlapping here. So this is what your propulsion block. Your propulsion block, it redelivered back into an imbalance. And then eventually close. I entered right here. And then my original target, here this is a 5-minute order block, but my original target was supposed to be these lows for around 4% of a win. I did hold the trade, but I cut it around here, cut it partial, and then I cut it the final one like right here, because it just wasn't worth it. It wasn't worth it in my opinion, holding this trade, even taking this trade in the first place. I knew I shouldn't have taken it. Even though I can trade like this, I can scalp intraday, like little scalps intraday, catch like, a good amount. I just feel like I'm not there yet, like I want to continue tape reading like for the next couple of weeks and continue to get like my skills really good at tape reading and like watching the market and trying to dissect price with narrative. Again, right now I'm not really trying to have risk on the table and like have any emotional attachment to the market and the way it's moving without like logic. I want to have logic as to why the market's moving and just like trying to understand, and like get a better feel for what price is doing at all times, from New York AM session from 8 to 12, and that's it. Of course, PM session at times like FOMC events, certain things like that, or earnings, seeing what happens, seeing what happens before that, so certain things like that, but mainly just FOMC. But yeah, this was the trade idea. This was supposed to be the original target, and then this was going to be the final target down here. As you can see, that there eventually was met. So this would have been a 1 to 3, but I closed it early again. And to me, it just wasn't, like it wasn't not worth it. The trade was good in my opinion, but it just wasn't one of the trades I felt comfortable with this amount of risk. I was willing to take a 1% win in my opinion. I think 1% is still good. It's not even about the money. Again, I've been trying to tell you guys by my notes. It's not about the money. Look, let's pull it up. Let's pull up my notes. I know you couldn't see it last time, but making so many annotations to understand why price is moving, reviewing certain trades we lost and trying to understand why we lost, and now we could have been better to prevent the loss. And we learned, and what we learned only because we annotate doesn't mean we're good at trading. This is another thing. We need to learn how to trade while reading price. Like, it's another skill to conquer. First, we need to build the narrative skill. So again, reading price versus actually taking a trade and reading price are two different things. I promise you. Once you have risk, boom, like that, But first, you want to have the skill of being able to read price. Then eventually, when you're in the trades, it becomes a lot more easier. Of course, you may not win. Of course, you may manage the position incorrectly. But if you know how to read price, those things should come along the way. They should be conquered pretty easily, whenever you're in a trade, as long as you know what you're doing, as long as you know how price is moving, why it's moving, and all these other things. Stick to mechanical model, continue then continue to work on discretionary market price reading skills, building the narrative skills. So again, I didn't stick to my mechanical model. I was more discretionary here. Did I do bad? No, I didn't do bad. Do I regret taking this trade? No, I do not. A little bit actually. I do take a little bit. I do have a little bit of regret because I just didn't stick to my mechanical model. And I'm gonna show you guys where it was presented today. But let's go back up to the 5-minute here. If this held right here, you can see if this held, this was going to be a means to what pushes up, and you can see it just didn't hold. We're sweeping multiple times. We're reaching into this higher time frame PDA right here, which is the 4-hour or the 1-hour SIBI, and I knew we were at a higher time frame PDA array. We're sweeping these highs. We're breaking back up into there. On the 30-minute, we had a 30-minute CRT. This is another reason why I realized this was like the third candle opening up, manipulating. You can see we went down lower. We hit this right here. So I need to have a little bit more confidence in the trade ideas whenever I have something like this. Then eventually you can see the order flow was reversed after we hit the 50%. Again, that's why it's 50% is a key target whenever you're using CRT. And this order block did not hold. You can see that there didn't hold. I'm gonna keep it on there though. And then on the 3-minute, see we formed the 3-minute change in the state of delivery right here. If you want to use the first candle, you can say that, you can use that. So you can see that formed the change in the state of delivery there. You close and you interrupt, boom, you move up higher. But if you want to wait for that candle closure right there, you can, which I did. And you can see that there we retraced and then we started to move lower. So again, the 3-minute, the 1-minute, they all correlate. Just this 5-minute was a little bit lagging. And again, sometimes like a 1-hour SIBI like this, is not going to get, respected. You're not going to, use it as a means to push you lower. Like this order block, it wasn't as a means to what pushes up higher. It was disrespected, it was ran through. And certain PD arrays like that, you're going to have to be able to identify how and why they're even getting ran through on the lower time frame, like this right here. This is bullish order flow. Even though we're in a bearish PD array, it still shows that we're having bullish order flow. And a lot of people are going to be like, oh, let's just look for shorts. No, you're going to have to be able to identify why price is telling you it's bullish on the lower time frame but bearish on the higher time frame. Which time frame is correct? They're all correct. Every time frame is a piece to the puzzle, like I was talking about yesterday. You simply have to add up the pieces to the puzzle to understand why it's doing what it's doing. And that's the main thing I'm just trying to work on is my narrative. Why are these things? Again, this is my bottom question right here. Ask why. That's all you have to do. Ask why is price in here not respecting this bearish PD array? Why? Because we have this right here. You have this bullish order block on the 3-minute. We have the 3-minute bullish balance price range respected. Why? Why are we reaching for this high? Because that's our short-term objective. Where is our next objective? Why? Because we want to see where our next objective is. Where's our next drawn liquidity? These standard deviation targets right here. Are we likely to get there? Yes. Why? Because we have a break of market structure here. We're showing bullish order flow. We have another buy side imbalance being respected right here. But you want to see another one created here. Why? Because you're inside of the premium. You're close to your objective. That's why. We have a premium buy side imbalance here. You want to see this being tapped up into. You don't want to see the 50% being hit. Anything lower than the 50%, being traded up into. You want to see everything inside of the premium side be respected and continue to push you up higher. And, the premium buy side liquidity up there. That's all. Because you're in a discount still. You have all these objectives, all this low resistance, this buy side up here to target. You still have way much higher to go. Because you already moved so much lower after the elections. You can see how much we moved lower. This is all old price action though up there that we were tapering yesterday. And I'm gonna give you guys my bias as to why. I'm bullish on these, but I was a little bit short-term bearish. So, GU, we're not holding the consequent encroachment. We may see, we're seeming very weak. We seem to be reaching for this low. We don't seem to be respecting the BISI up there. So again, we're looking a little bearish though for right now. Daily time frame though, we seem to be creating a bearish order block. We can see we have swept both sides of the market. So we swept both sides. What does that mean? We're likely in a range bound market condition now. We're going to go continue back up and down for FOMC. You can see we have a bearish mean threshold, this order block, which we can retrace up into to move lower there after we hit the premium side of the range. And then I forgot, did I even mark it out? So yeah, we do have CRT on the 4-hour time frame, which we can retrace to the 50% to then move and have a large expansion. I expect the market not moving any much more today because we had such a large expansion from the afternoon session, from Asia session and the elections. You can see that there. We had such a large move already. We don't need to move there in New York at all. All the volume is sucked up already. You can see that there, they're in Asia session. We're moving. When Asia has large range expansions, New York and London aren't really going to be moving as much anymore. Say we can retrace into the 50% of this bearish order block right here, these two up close candles, and we have a 1-hour bearish BPR there, which we can also retrace up into inside of the premium side of this 4-hour CRT, which we do want to see the retracement. So you can see we swept the low. Now we want to see the market come back up, retrace into this bearish order block and the bearish BPR to then eventually move lower and continue to the downside and target this objective right here, which is this short-term low. We also have the consequent encroachment of this wick, which didn't get inverse, and now we're simply using it to push us up higher in the premium side. So you can see that there, this premium wick consequent encroachment, we have a SIBI here. We're going to want to see the market respect that area and then eventually move up higher. Anything inside of the discount here, you want to see it used as a what? As a means to push you up higher. And then on the 15-minute time frame, we have a 15-minute order block and a 15-minute mean threshold. What happens here? We have a 5-minute SIBI, a 5-minute BISI, which got inverse. We swept the lows. What happened after? Let's go look. On the 1 hour, you can see this didn't get respected. Why? because we formed TRT. We swept the low, then eventually we opened up the third candle. Now we're moving up higher. We're about to hit that objective up there. On the 15-minute time frame, we had the 15-minute bullish order block up here, which didn't get respected. You can see it got ran through, closed below. Closed below the bodies, and then eventually you can see we formed a SIBI, which got inversed. And you can see this low was a false market structure shift. A lot of people thought, we're going to continue lower. No, it's a false market structure shift. And then eventually we start to move up higher. This would have been your retracement. The premium weight consequent encroachment on the 1 hour, you can see it did not hold. It did not hold at all, but the bodies were kind of respecting the, the discount side of it. See, the bodies were, respecting the, the lower quadrant of the 25%, the extra discount. You can see that there was pushing up higher. Now we're about to reach up into here, and you can see the 4 hour time frame. CRT has already been met with the 50%. So boom. What does that tell me now? What does that tell me? The market doesn't have to move anymore. The market can chop around in this area and then eventually wait for tomorrow, and then eventually start to expand in either direction. But I would prefer bears for sure. So, but again, I can't expect anything. I have to continue reading price and seeing what it's giving me, and then eventually just take that for what it is. The indices, again, we're moving up higher, but we're just chopping around. Here you can see the double sweep on the 1 minute. So we're going to show you guys that right now. You can see that there, boom, sweep, break a market structure, unicorn model, fair value gap, fair value gap, buy side imbalance respected, pushing you up higher. Why did this buy side imbalance get respected? Let's go look at the 15 now. 15-minute time frame, you can see we had a sweep there on the 15-minute time frame. What other PDA did we have there on the 15-minute time frame though that we were respecting? What we respected on the 30-minute, not the 15-minute, was the 30-minute mean threshold of this bullish order block to change in the state of delivery. You can see that there. We were still staying inside of the premium side, respecting this premium side of the rate. What are we going to do? Reach for the highs. And then on the 5-minute, what is this right here? Your last line of defense. This order block right here. You can see the mean threshold respected. And again, if order blocks are getting respected, you can see, like there's a key prominent low inside of an order block, like it's near equilibrium or the discount, and you see the market sweep it. What does that mean? It's likely a reversal there. So it's a key prominent reversal there, as you can see, but the 50% was respected here, and then eventually was used as a means to push you up higher after sweeping the low. So again, you want to see key lows swept, key highs swept, but also respecting higher time from PDA rates like this 5-minute order block or the 30-minute, mean threshold, not reaching into the mean threshold. So very, very nice price action today. Again, just taking a little quick scalp. I'm done for today. I'm not really going to be trying to have my hands, in the market or, any risk in the market, because again, tomorrow we have FOMC, waiting for FOMC tomorrow, seeing if I can find anything there. And again, working on my discretionary skills, continuing to tape read, continuing to see what I can find in the market and what skills I can get better at, because that's all it is now. That's all it is, I talked about this again yesterday. If you didn't watch yesterday's video, go watch yesterday's video. It's simply about getting good at reading price, not trading. It's a skill. It's a process. I want to get good. I've watched every ICT video. I've watched majority of ICT except for the 24 and the charter content. I have everything. It's simply me. I need to apply the concepts, put in the work, and review, analyze, continue to study, continue to get better at reading price real live time. I don't want to backtest. I don't want to do that anymore. I want to get good at reading price live time, continue to do that on every single time frame, because the market is fractal. I want to put all the pieces of the puzzle together and get good at doing that, because if that eventually happens, I don't need an entry model. I don't need to stick to a 22 model or inversion model or a unicorn model or the CRT model 1. I don't need to do that. If I put everything together, I'm not going to have an entry model. I'm going to simply just read price for what it is. There's going to be different entry models I use, but I'm not going to simply be limited to one and only try to use one as a mechanical trader. I'm going to be, of course, distinguishing myself as somebody that just reads order flow for what it is and able to trade the market for what it is. Some trades I may enter at the consequent encroachment of this wick. Some trades I may enter at this order block mean threshold being hit. Some trades I may enter at this 22 model. Some trades I may enter at this inversion model. Some trades I may enter off of this unicorn model. Some trades I may enter off of just CRT alone or an inversion model. Doesn't matter. At the end of the day, price is fractal. Price is universal. If you know how to read the market, that's all you need. And that's all I'm trying to work on. I need to continue reviewing my notes, continue reviewing my trades, continue to analyze the market, and just continue to get my skills in tape reading better and better every single day. And that's all I'm going to be working on. I'm not watching anybody's content anymore. I'm not being consumed by, I'm not consuming anything anymore. I'm simply just going to read price for what it is, and that's it. So that's pretty much really it. Peace.